makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Micron tumbles in after-hours trading as the memory chip giant fails to meet sky-high expectations. Despite the market volatility, Bill Gates remains bullish on AI, saying the hype is justified. We have more of our interview with the Microsoft co-founder. Plus, UK Prime Minister Rishi Sunak and Labour's Keir Starmer get combative in their final TV debate 1 week ahead of the general election. Let's check in on these markets then. Yes, concerns, it seems, as to the expectations not being met by the reality, at least for some investors. And again, the expectations stretched when it comes to the story around Micron. They did actually beat in terms of the earnings story. The outlook, though, for some causing concern, and that stock taking a hit. And the read across to the Asian semiconductor makers and European chip makers as well is there for us. We keep an eye as well on what's happening in the retail space at the lower end and the higher end, because you have an upgrade coming through for the likes of Kering, but H&M missing on profits. You can see the mix there across the map. S&P futures, meanwhile, pointing to modest losses around 0.2%. Nasdaq futures pointing lower by 61 points, and certainly Micron will be part of that story. On the consumer of the US, we have the retail story there as well, with Nike earnings out later today, but also the GDP print as well, as to whether or not that gives us more colour and more info as we look ahead to that potential Fed move later this year, with inflation, of course, coming through with PCE on Friday. European stocks across the benchmark currently flat. Cross asset, bit of selling pressure coming through on treasuries yesterday. Today, you're flat essentially on the benchmark 10-year at 4.33, as yields did tick up marginally yesterday in the session. 106 on euro dollar. A little bit of strength coming through on the single currency, up 0.1%, largely down to a little bit of softness for the dollar, given the gains that we've seen in the last few days, of course, for the greenback, well, year to date, really. $85 a barrel on Brent, currently up 0.4%. We continue, of course, to monitor the inventory story in the US as we lead up as well to the key summer driving season. Let's check in on Micron then, pre-market. And again, it was the outlook story that for some disappointed, didn't quite meet the most stretched expectations. They still have a backlog of orders and a building capacity around that, and that's part of the story for Micron. But this is the chip maker, of course, around the memory chips that work with NVIDIA's GPUs. The demand has been there. The stock is up about 65% year to date. But as you can see, pre-market, Micron down a little over 6%. NVIDIA also feeling the cold ripples of that Micron story as well, currently down 1.6%. It's been a volatile week for that maker of AI chips, of course. Let's bring in, on the market view, of course, and what is happening particularly in the tech space, JP Morgan Asset Management, Chief Market Strategist, I should say, for EMEA at JP Morgan Asset Management. Karen Ward. Karen, thanks for joining us in the studio. Let's start with what we've learned from what's happening in the tech space this week. We've had the volatility around NVIDIA, that 3-day slump, then it rallied, now it's under pressure again. Micron coming in with an outlook that for some missed expectations. Does it suggest there's fragility around the AI theme?
Well, I think what we know relative to 2000s, because obviously everyone's comparing to the 2000s, is many of these companies are delivering fantastic profits. The reason NVIDIA's done so well is largely because of the profits delivered rather than just what we were hoping for the future. So in that aspect, I don't think tech broadly is a bubble. However, what we did learn from the 2000s, and this is what I think we're starting to see now, is usually not everyone is a winner. And working out which are the specific companies which are going to take the market share, really be the dominant player. That's the really tricky part. So I think for us, it was about, acknowledging the tech story. There is definitely tailwinds to where this is going. We are believers in AI being a powerful force, but perhaps being careful about how you're actively managing some of that concentration risk. But also, I think, thinking more deeply, because, of course, tech versus the rest is the big question. Just stepping back and thinking, well, if AI is going to be so transformative, they need consumers for the product. So looking outside of the big seven to the other 493 or elsewhere in the world and thinking about what are we hearing about how other companies are going to use AI. And that will tell us a lot about the future earnings of the big seven. So for us, it was a little bit about carefully managing the concentration risk, but taking perhaps advantage of the consumers of AI rather than focusing squarely on the producers, which I think is where the market's been so far.
That's interesting. In terms of allocation then, would you take some profit in some of those big tech names to allocate to the consumer play around AI, or is it a little early for that?
No, absolutely. I think that's the right thing to be doing. And also it is just about managing concentration risk. You know, Nvidia's 6% of the S&P. And I think one of the things that concerned me was when I look at the earnings expectations for a company like that at the end of next year, and these are people whose sole job is to analyse this company and consider where it's going, which is not my job. I'm a macro strategist. The range of those earnings expectations is so wide. So given that, I just don't want quite so much risk in one single stock. And therefore, for us, it has been about just actively managing and starting to maybe shuffle towards the beneficiaries rather than the producers.
And on that concentration risk and the lack of breadth in this market, particularly, of course, pronounced around the S&P, is there a change in narrative when the Fed finally does cut? Is that the catalyst for a broadening out of this market?
No, I don't really think it is. I mean, I think monetary policy, one of the big things we've learned over the last few years is that monetary policy is not as potent. And therefore, rate hikes didn't hurt as much as we thought. And similarly, I don't think rate cuts are going to be the big story. Fiscal policy is far more potent than monetary policy, I believe. And we still have fiscal tailwinds. You know, the checkbook is still pretty much open in the US. The IRA, the Jobs Act, the CHIPS Act, you know, all these multi-year programs are still a huge stimulus through that economy. And that, I think, is still going to be, you know, the significant tailwind. So I think it's more about how the story broadens out from the underlying fundamentals. The Fed could help the narrative. I think people in small caps are waiting for the Fed as an indicator to move there. But no, I think we place too much weight on interest rates and how that's affecting.
Because I think for a lot of people, when you think about fiscal stimulus, you think automatically about the stimulus checks that came through for consumers and households, and the fact that we know the data suggests that's starting to dry up. But you're pointing and reminding us of the fact that we have these long-term programs backed by that spending that is not going to be derailed, at least in the short term. And you see that as being supportive for these markets. The markets, broadly, on an index level, do have momentum thanks to that.
Yeah, I think so. I mean, look, the US is still running a 6% deficit. I mean, in the whole US exceptionalism discussion, the one thing I do always remind people is, well, you know, the US is running a 6% deficit at a time of record low unemployment. There is, that is certainly helping, I think, with how the US economy has proved resilient, how earnings have proved resilient, and neither candidate are talking about reining that in.
You see a convergence, though, between the US and Europe. What is the approximate time frame for how you have that in view, and how should portfolios adjust around that?
Yeah. So before the French election, for us it was all about the macro, because I think in Europe we really haven't yet had our post-pandemic bounce. We came out of the pandemic into Russia invading Ukraine and an extraordinary cost of living crisis. So we still have those pent-up savings. Our consumer has been rocked. Our consumer has been lacking confidence for the last 2 years, understandably, but we're coming out of that now. So I think much of the growth, the consumer growth that the US has experienced last year, I think in Europe we're about to see some of that come through. So I do see a consumer uptick coming through. Now, at the moment, the market has taken a step back from that optimism, or at least the green shoots of the optimism.
Is that a buying opportunity?
I think it is. I think in a couple of months' time we won't be talking about French politics at all, because I think, you know, particularly what international investors I don't think have quite yet understood entirely is this is not 2011, 2012. None of these more populist parties are advocating leaving the euro or advocating leaving the EU. This is about migration, which is a thread that we're seeing in politics across the West. And it's also, in many parts, about a more business-friendly regulatory system. So I think that is, to me, and I think also that the need for a degree of fiscal prudence following the experience, perhaps the UK gave a good example of how governments can't push the envelope 18 months ago, of course, with the events that happened here in the mini-budget crisis. So that's brought a degree of reality to the fiscal discussion. Most of them are talking a pretty sensible fiscal game. And therefore, I think, you know, whatever happens as a result of the French election, the cohabitation, at the moment, working on the basis it's going to be with the right. And I don't think it's going to be...
sectors like French banks down about 10% since that announcement by President Macron could be an opportunity.
Absolutely.
OK. When it comes to the UK, I want to draw on your experience at the Bank of England, your previous experience, of course, as an advisor to the MPC at the Bank of England. What is your view in terms of how the rate cycle unfolds? Is August, I should say, locked in for you at JP Morgan in terms of the BOE going? And how do you see that cycle of cuts coming through for the central bank?
The Bank of England seem to really want to cut. I think they are concerned that these policy rates are restrictive and this is just long and variable lags. So therefore, I think they would present it as, this isn't easing, this is us taking our foot slightly off the brake. So they need the data, however, to confirm that that's the right thing to do, and the data hasn't gone their way. We do need to see that softening in the domestic inflation rates. We need to see wage growth coming off more broadly across the indicators. We need to see service sector. I do think they'll get some of that. I still, at the moment, think August is the most likely, given they seem to really want to cut. Maybe it gets pushed out to November, but either way, I certainly think that the next move in the UK is down.
Very briefly, before we let you go, the MSCI China Index falling into correction territory today, down about 10% from its highs in May. Can broader EM perform without the China equity impulse coming through?
It's a great question. It's the question I think I'm asked a lot at the moment. I would say in the short term, it's a little bit more challenging. The routes in which China supports the broader complex, its commodity demand, tourism flows, make the outlook in its neighbours a little bit more challenging. However, medium, and maybe we're only talking 2, 3, 4, 5 years, some of China's woes actually are real benefits to elsewhere in the region. I've been so surprised how quickly we're seeing trade routes reshuffle, how the friendshoring narrative is playing out. And therefore, you're seeing low value-added manufacturing move South Asia, high value-added manufacturing move north, movements to Mexico. So I do think, actually, that some of China's weakness, and particularly in how we're seeing these trading relationships change, is going to really benefit other parts of EM. OK, Karen Ward, thank you very much indeed. Chief Market Strategist for EMEA at JP Morgan Asset Management, with a view there on EM, adjusting supply chains, maybe how to invest around that, and a view that the BOE probably goes in August, and the tech rally has further to run, but you need to distinguish between those major AI names. Coming up, Bill Gates tells Bloomberg that AI's green benefits, the green benefits of AI, we know it's an energy consumer as well, will outweigh its emissions. We're going to have more from our interview with a billionaire climate tech investor and, of course, Microsoft co-founder. That is next. This is Bloomberg.
Innovation has to happen everywhere. We have really thought about how do we partner with people to bring an innovation theory to different parts of the world. How can we participate and help? And so we're really grateful. We've got a new program, you might have heard about this, with Singapore, where we are partnering to do some expansion of our fellows program for the region, really to spur innovation there, drawing entrepreneurs, do what we do in all the rest of the parts of our work is try to help innovators, succeed.
And that was Rodi Guidero, the Executive Director of Breathrough Energy, the clean tech investment firm founded by Bill Gates. Now, Michael Bloomberg, the founder and majority owner of Bloomberg News, parent Bloomberg LP, is an investor in Breakthrough Energy Ventures. Billionaire climate tech investor Bill Gates, meanwhile, has told Bloomberg that artificial intelligence will, quote, pay for itself when it comes to its associated greenhouse gas emissions, as the technology will help push forward the energy transition. Gates also weighed in on the valuations of big tech companies driven by the AI boom.
The big breakthroughs come when AI teaches you about material science, like, okay, I can make a solar cell without using silicon, or I can grow food very efficiently, in a laboratory using fungi or some other approach. So it's as AI gets into the basic science thing that it goes beyond just kind of a super smart tuning where you save 10% here, 15% there, to helping you with that fundamental design of the green product.
And how concerned should we be about, we're here talking about energy, the extra energy demand that's going to come from the AI boom? Is it worth the extra emissions just for the power for the intellectual power that AI can bring to bear on this?
Yeah, so the additional electric demand, from electric cars as we change that over, or electric heat pumps as we change that over, or steel manufacturing, all of those dwarf even this amazing demand for data centers. Now, there's lots of ways that we're trying to make the AI computations more efficient, so we're not using as much energy. So the exact path of does it end up being, 3% of electric use or 6% of electric use, it's not going to go above 10%. So, yeah, it's got to fit in, it's got to pay the price, and those tech companies are probably as sensitive to wanting to even pay a bit extra to use green energy of any electrical customers in the country. So they'll help push the green technologies forward. They're willing to pay somewhat of a premium to get in and be able to say that it's all done without greenhouse gas emission.
So you think on balance AI will, when it comes to emissions, AI will pay for itself?
Absolutely.
Now, speaking of AI, you've obviously been in this industry for a long, long time. You've seen lots of ups and downs in the tech space. Right now we are seeing, of course, a tidal wave of money going into AI. NVIDIA, for example, recently became the world's most valuable company, albeit briefly. When you look at market caps like this, do you worry that we're seeing bubble valuations?
I'm not a buyer and seller of tech stocks on like a daily basis or anything. These multiples aren't as high as they were, say, during the internet bubble. And the growth is real. I mean, AI is not pets.com. This is something very, very fundamental. So don't take my view on any particular stock, but the growth potential, there will be some big winners in this AI space, which is why you see all the leading tech companies, including Microsoft, putting tens of billions of dollars into not just the back-end capacity, but re-engineering their applications so that you're far more productive.
Billionaire climate tech investor and Microsoft co-founder, of course, Bill Gates, speaking to Bloomberg. Coming up, EU leaders gather with the hopes of finalising the bloc's new leaders. More on those changing power dynamics next. This is Bloomberg. Welcome back. European Union leaders are meeting as they look to wrap up a deal on the bloc's top jobs after failing to reach agreement last week. Let's get more then from Bloomberg's Oliver Crook, who's been following all the intricacies and horse trading around this situation. First up then, the EU Council meeting, Ollie, since the election, the first one. What do leaders need to get done at this meeting?
So as you allude to, Tom, obviously what they need to get done here, the real deliverable is naming those three top jobs, which is the EU Commission President likely to be filled by Ursula von der Leyen, the EU Council Presidency by Antonio Costa, and then also, of course, the foreign affairs policy going to be filled by the Estonian Prime Minister Kaja Kallas. So those are the three main jobs, and you really need to hammer down those three main jobs before you get anything else done within the EU, because all the other commissions, everything trickles down from those sort of three anchored jobs. What they also need to do is put out their strategic agenda, which is really this document that all these EU leaders need to get together on and agree on, that really sets out the policy priorities for the EU over the next 5 years. In there, you will find some of the familiar topics from Ukraine, defense, security, but of course also the question of competition. And of course, we also have Zelensky in town today, who's going to be meeting with the leaders on the week that the EU and Ukraine have begun the accession talks. That is the negotiation, formal negotiations for Ukraine joining the EU. This is a very long process, but a significant one to begin formally.
So all of this on the docket for EU leaders at a time when, of course, the power dynamics are shifting. How is that impacting and how is that adjusting the institutional nature of this EU?
Yeah, Tom, I think it's really interesting to think about how Macron's weakness in France and Meloni's strength in Italy, how does that translate into kind of real power within the EU? For Meloni, she was in Italian parliament yesterday railing against the EU and their appointment process, basically saying that she'd been shut out of the top job negotiations. She doesn't technically have a seat there because it's the coalition of the big three that have come together to name those top jobs. But she can make a lot of trouble from the sidelines. Macron, for one, his priorities will certainly be falling down the agenda. Joint debt, that was one of the things that he was really concerned with. And also the question of whether a right or a left government comes in France. Neither of those are great for the EU.
Oliver Crook on the ground for us in Brussels and the changing political dynamics in the EU and the implications as well. Ollie, thank you very much indeed. Now, with a week until the UK election, we're going to look ahead to how that vote and that election is shaping up. This time next week, July the 4th. We'll get the details and the preview. This is Bloomberg.